Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight. And today we're diving into a fascinating filing from Texas Capital Funds Trust, a report that's got more moving parts than a Swiss watch, and some of these parts are telling quite a story. This is the semi-annual shareholder report, and it's essentially a financial health check for several of their investment funds. Think of it as a report card for their money management skills over the first half of 2025. But it's not just about numbers, it's about what those numbers mean for their investors and the broader market. There's a lot here to unpack, from their investment strategies to how they handle your money. Let's start with some of the funds. We've got the Texas Capital Government Money Market ETF, which, as the name suggests, focuses on very safe government-backed investments. This fund aims to keep your money stable and still give you some return. It's like a savings account, but with a bit more oomph, and it's designed to be super liquid, meaning you can get your money quickly. Then there's the Texas Capital Texas Equity Index ETF, which tries to mimic the performance of a specific stock market index focused on Texas companies. So if that index goes up, this fund generally goes up too, and vice versa. It's a way to invest in the overall Texas stock market without picking individual stocks. We also see the Texas Capital Texas Oil Index ETF. This one follows an index tied to Texas oil and gas companies. Given Texas's strong connection to the energy sector, this fund's performance will likely be closely tied to oil prices and the health of the energy industry. And finally, the Texas Capital Texas Small Cap Equity Index ETF, which focuses on smaller companies in Texas. Historically, smaller companies can offer higher growth potential, but they also come with more risk. Now let's dive into the numbers, because that's where the real story unfolds. Right off the bat, we see the net assets for each fund. This is the total value of everything the fund owns minus any money it owes. For the Texas Capital Government Money Market ETF, it's around $57.6 million. For the Texas Capital Texas Equity Index ETF, it's smaller, around $11.7 million. And the Texas Capital Texas All Index ETF is smaller, around $11.7 million, and in hot for ILT and dollars, ETF is smaller, around $11.7 million it owes. For the Texas Capital Texas Small Cap Equity Index ETF is more so on the smaller side at just under 10 million. These numbers give us a snapshot of how much money investors have entrusted to each of these funds. The total number of portfolio holdings tells us how diversified each fund is. The Government Money Market ETF is holding 27 different investments. The Equity Index ETF has a much larger number, 210 holdings, and the Small Cap Equity Index ETF has 170. The Oil Index ETF holds 29. A higher number often means more diversification, which can help spread out risk. Now let's look at how the money is actually invested. This is the what did the fund invest in section. For the Government Money Market ETF, a huge chunk, over 80%, is in US Treasury obligations. This is about as safe as it gets in the investment world. These are essentially loans to the US government, which is considered very unlikely to default. They also have about 8% in repurchase agreements. These are short-term deals where the fund lends money and gets collateral, usually government securities, in return. They are also considered very low risk. Switching to the Texas Capital Texas Equity Index ETF, we see a breakdown by sector. The energy sector makes up over 20% of their investments. This is significant, and as we know, the energy sector can be quite volatile, heavily influenced by oil prices. Consumer discretionary also represents a big slice, nearly 20%. This sector includes companies that sell non-essential goods and services, so it's sensitive to consumer spending habits. On the other end, materials is a very small part of the portfolio at less than 0.5%. And then there are the top holdings, which show you where a significant portion of the fund's money is concentrated. For the Government Money Market ETF, the top holdings are all short-term US Treasury bills and notes, with yields around 4.3%. This really highlights their focus on safety and current income. Looking at the Texas Capital Texas Equity Index ETF, we see companies like CrowdStrike Holdings, Inc., a cybersecurity firm, and Tesla, Inc., the electric car maker, topping the list. These are growth-oriented names. And for the Oil Index ETF, it's dominated by major energy players like ExxonMobil Corp and ConocoPhillips. This directly reflects the fund's focus on the oil and gas industry. Let's shift gears to the financial statements, specifically the statements of operations. This is where we see how each fund performed in terms of income and expenses. For the Capital Texas Oil Index ETF, the net investment income was about $178,000 for the 6 months. However, they had a net realized loss variation on investment securities and a significant change in unrealized depreciation on investment securities, which resulted in a net decrease in net assets resulting from operations of a negative amount, over $1.2 million. The S tells us the fund lost value during this period, primarily due to a drop in the value of its investments, not necessarily from selling them at a loss. The Capital Texas Small Cap Equity Index ETF had a similar story with a net investment income of about $52,000, but a substantial change in unrealized depreciation on investment securities, leading to a net decrease set resulting from operations of a negative $74,000. The government money market ETF, on the other hand, showed a positive net investment income of $970,000 and a small net realized gain on investment securities. Overall, this fund made money, which is exactly what you'd expect from a low-risk investment. Now let's look at the financial highlights which give us a per-share performance. This is crucial for understanding how individual investors fared. For the Capital Texas Equity Index ETF, the net asset value beginning of year was $32.51 per share, and by the end of June 2025 it had grown to 34.70. This represents a roughly 7.1 cents per share, and by the end of June 2025 it had grown to 30 decent. The Capital Texas Oil Index ETF, however, saw its net asset value beginning of year at 24.48 drop to 21.69. By June 2025. This is a negative return of over 10%. This significant loss clearly shows the impact of market conditions on the energy sector during this period. It's also worth noting the expense ratios. For the Capital Texas Equity Index ETF, the ratio of expenses to average net assets is 0.39%. For the Oil Index ETF, it's also 0.35%. And for the Government Money Market ETF, it's also 0.35%. And for the Government Money Market ETF, it's 0.25 to read an annual cost of owning these investments, and they seem reasonable in the context of the industry. Now let's consider the broader picture and what this filing tells us about Texas Capital Funds Trust. Across all the equity funds, there's a clear emphasis on investment and market risk. This is the fundamental risk that any investment can lose value. The filing explicitly states that markets can decline sharply and unpredictably, which is a necessary warning for any investor. For the index funds, there's also index tracking risk. This means that even though they aim to follow an index, they might not perfectly match its performance due to fees and other costs. It's important for investors to understand that these funds are not guaranteed to mirror their benchmark exactly. One of the most important sections here is the statement on the basis for approval of the investment advisory agreement. This is where the Board of Trustees explains why they're sticking with Texas Capital Bank Wealth Management Services, Inc. as their in best interest of the shareholders. The board seems satisfied with the nature, extent, and quality of services provided. They looked at the advisor's experience, compliance procedures, and risk management. For the passive index funds, the advisor's role is more about tracking the index correctly, while for the money market fund, it's about stability and income. When it comes to performance, the board compared each fund's results to its peers and benchmarks. They noted the strong performance of the equity index fund and the stable income generating performance of the money market fund. However, the significant losses in the oil fund were also likely a key point of discussion. The fees and expenses section shows that the advisory fees and overall expense ratios are reviewed against industry peers. The fact that the advisor bears many of the fund's operating costs, except for specific items, is a key detail for investors. Looking at this filing more broadly, Texas Capital Funds Trust appears to be managing a diversified set of investment products. The government money market ETF seems to be performing as expected, offering stability and modest returns. The Texas Equity and Small Cap Equity Index ETFs reflect the broader market trends, with the Equity Index Fund showing positive growth and the Small Cap Fund experiencing a slight dip, which is not uncommon for smaller companies. The Oil Index ETF, however, had a tough period, showing the inherent risks of sector-specific investing. The negative returns here are a stark reminder that when the energy sector struggles, its investors feel it directly. The board's careful review of the advisory agreement suggests a commitment to good governance and investor protection. They're scrutinizing fees, performance, and the advisor's responsibilities, which is exactly what you want to see from a fund management company. Now let's talk about the overall story here. Texas Capital Funds Trust is navigating a dynamic market. They have a safe haven in their government money market fund, and they're offering broad market exposure through their index funds. The key here is that their performance is directly tied to the markets they track, and as we saw with the oil fund, those markets can be unforgiving. The diversification across different fund types, money market, broad equity, sector-specific equity, and small cap equity allows investors to choose their risk appetite. The biggest takeaway is the stark contrast in performance between the energy fund and the others. The more than 10% loss in the oil fund highlights the specific risks associated with investing heavily in a single sector, especially one as volatile as energy. This filing underscores the importance of understanding not just how a fund is managed, but also the underlying market exposure it provides. Alright, that's our deep dive into the Texas Capital Funds Trust filing. What's your take on these numbers and what they signal for the company's future? Do you think betting heavily on the energy sector, as seen in the oil index fund, is a smart move or a risky gamble? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community linked in the description below for more insights and discussions. Thanks for watching. See you next time.